How's it going, guys? Will Beach here with great stock trades, also free trading advice on Facebook. Um, what I'm gonna do is touch base. It's been a while since I made a video. Um, the 100-day or $100 challenge, portfolio control system, all that got put on a halt. I don't know if you guys have kept up with that on my YouTube or not, but I put that on a halt because Intrenio, which is the software I was using to do the automatic updates um, on that spreadsheet, they decided that they didn't no longer offer a free version and they want something crazy like $40 a month, which makes no sense at all for what it's doing. I mean, it's literally just updating stock prices. So that's a no-go on that. I mean, you can do it manually, and I would still recommend it, obviously, because the system itself is built in. Um, for what I put in my spreadsheet, it's all formulated. You would just have to go in and update the stock prices manually to keep it up, the portfolio updated. Which for my own personal one, I do do that because it's important, obviously, to keep everything updated. It just became a little tedious, and I didn't want to. Um, discourage you guys. So maybe I'll show you in some later videos how to just go in using the spreadsheet and updating everything manually, and that way it still works for you. But in the meantime, I wanted to go over some other stocks that I've been following, some of my updated um indicators, which I'm still using the same setup. So if you guys have watched the 1 hour masterclass, then you'll understand this setup that I have on my screen right now. I have the ADXR, the MACD, momentum, and the stochastic slow. So if you want more information on that, please go ahead and check that out on the 1 hour masterclass. The only thing I've done different, and I've recommended this many times, but just to reiterate, there's a guy named Steven Primo. He's got some really awesome videos out there. I also use his Bollinger Band settings, which is 0.382 and negative 0.382. So if you're using TD Ameritrade, basically in your studies, you just go into the Bollinger Bands, hit the little gear symbol for settings, and you can see here that I have negative 0.382 and 0.382. And what that looks like is these skinny purple lines. Oh, let me get that back. Where you at? There. These skinny purple lines are now my Bollinger Band highs and lows. The red is still the 20-day moving average. The 9 is still my 50-day moving average. I'm sorry, the 9. The yellow is my 50-day moving average, and this green line is my 9-day moving average. So that way I can see my crossovers as well. The purpose of these smaller Bollinger Bands is because one of his strategies is based around certain closes above those Bollinger Bands. So I like to use that as an indication. I'm going to actually show you that right here and how it syncs up very well with what it is that I'm doing. So with his settings of 0.382 on these Bollinger Bands, we want to close above it 5 days without closing below it, and we want to create a V pattern, which would, it'd be something along the lines of this right here, where we have this, remember this purple line right here, we want to close above, so we close above it here, 1 2 3 4 5. We have this high, we have this dip, but we're still closing above that line, and then we have a break above the highest point right here. When you get this break above, that's actually an entry point. And then what it says is that basically wherever the trend started, so even though this is where we confirm, the trend actually started down in this area here, which would be around the 116 to 120 mark. Now we're at 216. And what you do is you take that and you basically add it to itself. So, and for this instance, I'm going to use a dollar. So 120 to or 116 to 216 is $1, and you can do that for one 200% or 300%. So that means I'd be looking for 316 or 416 for my exit because we got confirmation. Let's just see where it lies. It actually makes a little bit of sense because you see 403 was the previous high, and this is a weekly chart. So, the time in which this may occur is going to be longer because we're looking at a weekly scale instead of something smaller like, say, like a daily chart like this, where everything's going to happen much faster, but you can see it all coincide. You see this break up, break up, break up, break up. Okay, that all confirms exactly what we're looking at and that we might get this rush. Now, what sparked it? Well, we've been trending up above the 50 since way back here in June, but we had our first positive um, earnings right here, so that was the catalyst that helped shape this. And this is SEAC, that's Sea Change International Inc. And if you know anything about the way I trade, I really don't know a whole lot about these companies as a whole. These are just technical trading, going, scale here. So in this instance, again, we'd be looking at somewhere in this 316 to $4 range as an exit. And all this is confirmed here because we have our ADX above 25, which is our confirmed momentum. Obviously, we're above this zero line on the MACD and positive trend. Our momentum is above zero, facing up. And what we've done here is our stochastic slow is actually dipped down, which means we're going to start our uptrend, which is going to ride this top line. So as long as this stays up, this stays up, this stays up, and then we will have these dips along this top line, just like it was in a downtrend here. You see this downtrend, and you see how it stays, boom, bouncing off this bottom line. And now we are ready to start our uptrend, which is going to start bouncing off this top line, and that's going to start here. So I'm looking forward to see what SEAC does. As far as scanning and whatnot, I have quite a few different ones that I use. This is the one I like to call the 50 SMA breakout, and you can see SEAC. That was right there. That's where I got that. Let's just take a look at some other ones I haven't really looked at, but we can do that. AVP. So again, this is why it's called the 50-day SMA breakout, because we're above this 50-day trending line. So in this instance, this is something that's art, and we're at this 161% on the Fibonacci retracement, which in my opinion is kind of where I cap out. I like to try and catch this uptrend in this area, 38-50%, and then ride it to 161. But this fast movement up to this 100% line kind of doesn't allow that. Let's see what it looks like on the daily. You might be able to catch it a little bit differently on the daily. So in the daily, we had this bump and then another one. Yeah, it rocked a little bit up and down and up and down. So yeah, you would have wanted to catch, and then once we got above this, that consolidation, look at the rest of our indicators here. This is 20 on the ADX, and 25 confirms the momentum. Uptrend has begun above zero on the momentum. So at this point, right in this 245 range, would have been your confirmation that you could take this trade and ride it. And if you would have ridden it to this first crossover, even if you saw this peak and held on for a little bit, you could have technically sold right in this 320 range. So that means you would have taken, anywhere in 255 to 320, 70-cent move right there. This down crossover doesn't mean that you're going to just automatically lose everything. I mean, it's up to you to hold. A lot of people wait for crossovers below 50-day, but again, that means 255 to 288, you would have been done. So, I mean, that would have been a 30-cent move. I personally like the ADX crossover. It tells you a little bit more about, where, I'm sorry, this MACD crossover right here. The MACD happened before the ADX, and that way you could have caught it a little bit earlier, which would have been right in this area right here. Let's see what else. That's Avon, by the way. see what else we have. Just pick some things here on this scanner. If you guys are wondering how I set up scanners, I do have a video on my YouTube channel. Make sure you go through them and check them out. Make sure you leave comments, recommend anything that you're looking for or what you want to see. I'm happy to do these analysis on anything. It's what I enjoy doing, and I like doing it for free. So please, by all means, if it helps you, that's what I enjoy doing. This is already at a high. So this is becomes tricky when we go backwards to these lows because we've already been trending up. Doesn't do us a whole lot of good this way because we already know what it looks like, and this isn't doing us anything. Let's go on the weekly. So exactly with this weekly, you can see this is quite intense. This quick rise up here. We're gonna look for on this. We've already tested this 9-day coming back down. Um, kind of testing this 20-day, and it bounced back up, and now it's testing it again. But we have the crossover on the MACD, we have the crossover on the ADX. So I would say at this point we're going to start seeing it come back down, and then it'll reconvene here with this 50-day as we come down together. So I'd imagine you would see something in this 61% range between 11, 12. Uh, Obviously, it's already tested 1250. So yeah, maybe down to like this 1163. It might test that line again. Just depends on how it reacts when it gets down to this 50. Obviously, there's a lot of factors with when it comes to technicals. We're only looking at these charts, what they're telling us, and there's so many outside sources with Trump and all this China trade wars and all this crazy stuff that um, interacts with the market that tells us, all right, it can happen very quickly. We might be on a good run and then all of a sudden it just drops. So let's just take a look at the actual Dow Jones and see what we're looking at here. So again, now plan out a little bit further ahead. I usually trade between the daily chart, well, anywhere from 4-hour chart, daily, and weekly. With the confirmations being that whatever scale I choose, the next scale up confirms. So if I'm on a daily chart, the weekly should be confirming that move. If I'm on a 4-hour chart, the daily should be confirming that move. And what I mean is the MACD should be pointing up. So on this weekly chart, you can see that we have MACD crossover to a downside with an ADX that's slightly increasing. It's not really a concern. It's not in that 25 range of high momentum. So it's not a concern. It's more consolidation than anything, and consolidation is perfectly fine in the market, as we know. Um, and then we have a momentum above zero, but it's facing down. And then what you see here is we've had this trend up. That's what all this bouncing up with these. The red arrows obviously are showing you, it's going to the downside, but when it's bouncing up, that's an uptrend. So at the point that it goes below this line, we're on a downtrend. So as long as we're kind of staying in this area, it's fine. We're consolidating. However, it is concerning that we don't really know what's going on with the trade war stuff. Trump, we have a 2020 election, which is probably going to shake the market up. This move here, where it dropped down strong, and you guys can see here that this move was kind of anticipated, but maybe not to that degree. But then we had this, nice recovery. But the thing is now we're in this like arch this way. Usually you like to get curve upward this way. So when you have this arch downward, to me it's just showing an. The problem is again, there's no way to know. We're not there yet. Um, the election I think is going to play a big part. Hopefully we'll see one more run up before. It would be pretty awesome to see um, what that might look like. Obviously the market overall has just been crazy upside, huge pullback, and then a quick recovery. But again, we created another high, but we're getting rejected basically in the same spot. So as long as this 25.87 line kind of holds, then we have the opportunity to run one more time. And what I think we'd be looking at is, let's see what our Fibonacci says. I like the Fibonacci. We're going to go to this low. We're going to go to this high, which is 27 basically. And then we're going to this low. Okay. And then basically tells us that with this run and this pullback, we have, I'm going to have to go back farther to even see what it's trying to tell us. We're at least 28 there. It's getting interfering, so I'm going to try and delete this one line. Okay. So in this case, we're saying that with that type of move from this low, that high, and this pullback, that was only a 50% roughly draw. So we have possibly another huge run coming up. But again, we're running out of time as far as the election coming. I don't know what to expect with it. So I expect that, when you have these types of strong runs, we just, we can get some bounce back, but you see how far off this 50-day is? You see where it bounced off 50-day here? Didn't bounce off the 50-day here. It really needs something. It needs to connect. Basically, these lines are all playing off each other. They're averages, right? And they're averages for a reason, because that's the overall place that it should be around. So when you get these moves where they're so far extended above an average line, eventually it has to come back to that average line to average out. If not, it becomes way too extraordinary of a move, and then you get these catastrophic drops. And you can see here that this crossover, this is a monthly chart, so this is a very long term thing here. We had a crossover about a month ago. So in terms of the market, we created a new high, and a crossover to the downside. So to me, it's a little bit fake. It means like we're tricking ourselves to thinking the market is still going in one direction, but it's really not, because this has been on the downside and this has been on the downside. And you see we're trending down below this 25, which means we're losing that momentum. We're consolidating, and you see we've been hovering. This has been an uptrend this whole time for the past 5 years. But now we're crossover to the downside, and we're crossover here. But the good news is we're still holding above all these lines, but they're getting really close together. So if they don't bounce off each other, then they're going to start falling below each other. And then you're going to start seeing these tests again. And usually when you have this long stem here, this long stem, that's where it wants to go. And you usually get this recovery, and then boom, it starts falling down to it again. So again, in the next 12 months or so, when we have this new election and all this, I would expect to at least touch back down in that 21,000 range. But we'll see. That's a little bit out of the range here now. So, you know, I just got to keep playing the game and following along. If you guys have any questions, please let me know. Please watch the rest of the videos here so that you can really tell if you need any help with the indicators that I use, the videos that I'm using to help guide you, my tutorial ones. If you need any answers to anything on those, please let me know. This is something that I thoroughly enjoy doing. I like helping people. It's just, the market's an incredible place to be, And to be honest, most of the stuff I do is based around people that have small accounts, because that's why I use the daily charts and the weekly charts, because it allows you to invest $100 or $200 and still get a good momentum run. That's why this is momentum trading, and get good returns on a small dollar amount that helps you build your account faster with a lower risk. When you get all these confirmations, I have 4 or 5 confirmations. That's a big, it's a big deal. Most people only use like a MACD or an RSI, and that's it. They're like, okay, boom, it's doing this. I'm gonna run with it, and then they wonder why they lose their money, because it's not enough confirmation to tell them what's actually happening with that stock. So, anyways, I'm gonna cut this one short. Kind of rambling at this point, but if you guys have any questions, please answer that. And you can see here, this is what I mean. I was looking at the weekly chart, SEAC, and the monthly confirms. Now the monthly is below the 50-day moving average. However, the MACD is confirming an upside. So again, when I said threes to fours, that really confirms it. That's what's happening. So I would look for a quick run on SEAC if you have the opportunity. But that's not, this is trade at your own risk. This is just my analysis. Take it for what you will. But I think we'll have at least another dollar run on that. There will be heavy resistance at that 316 level. So, anyways, enjoy, and hope to see you guys soon. Subscribe if you haven't already, and I look forward to making some more videos for you guys. Appreciate it.